What's going on, everyone? Got some interesting stuff to look at today. Just give me a minute here so I can follow along and see who's commenting here. Okay, just give me 1 second here and we're going to get started, guys. How's everyone doing, though? How's your day going? All right, guys, just give me 1 second here to set this up and then we'll get started. Okay, perfect. Sorry, guys. I just, without Jordan here, I got to do that stuff myself. So thanks for being patient with me. But guys, I want to do a couple of things today. So last week on, I think it was my Friday Live, I actually took a look at MYOK and I actually called that there was some sketchy stuff going on. With their volatility. And I actually, I originally went in saying this is a really good trade to sell volatility. And then I backtracked and I said, don't sell volatility here. Unless you can understand thoroughly what's going on, there's a good chance that this is insider trading. And I'm going to break down for you today what I actually saw that gave me those indicators. And, I ended up not placing a trade on it on the fact of it being insider trader. There's too many other opportunities to look at. So I didn't quite get the time to actually do the research. But then today they came out with news that they had, passed some more trials for this drug that they were coming out with, right, for treating obstructive hypertrophic cardiomyopathy. It's big words, but it sounds like a pretty serious thing that they're dealing with. And it's reflected in what happened to their stock today. They jumped 60%, 63% today. And, that's to be expected when you have big news like this come out. But what was super interesting, the thing that was shocking to me was that last week, let me go here. So let's look at the stock, right? I was looking at the data behind the chart for the stock last week. And some of the information I was seeing blew my mind, right? So when I look at trading options, what I'm always doing is I'm looking for a pricing inefficiency. So I'm comparing the volatility that the market thinks there's going to be for that stock in the future against what my forecast of volatility is going to be, which I come to using, basically all of these factors here, including beta, GARCH, RV20, earnings IV, bunch of different stuff. And when I looked at this stock, right, I was looking at this last week on Friday. What I saw was really interesting. So this is a time series of how implied and realized volatilities move together. So line A, right, the dark orange line is the implied volatility of the market. So that goes up based on a couple of different factors, one of which being demand for options. So basically when this line goes up, it tells us that the market thinks that this stock is going to keep rising, right? So that this stock is going to have a lot of movement in the future, not necessarily up, but it's going to move a lot in the future. And what we can see here is that for the last little while, the implied volatility has been sharply increasing, right? From 50% year over year to 200% year over year. And then, that makes sense. Sometimes things happen, right? As these companies go into trials, et cetera, the potential for them to have a really big move and all the uncertainty goes up. Because if they pass the trial, there's a huge spike. If they fail the trial, there's a huge drop. And, obviously if that's happening, you would expect to see the actual volatility that's happening start to change as well. But in the last little while, when we look at this stock, we weren't seeing that. We were seeing it actually decline. So let's zoom in here a little bit because this is crazy. We have an increase in implied volatility and a decrease in realized volatility, not for one day, but over a longer period of time, right? Over the period of a month. And this leads me to think what the heck is going on here? right? Normally, like when you see a spread like this, it's not persisting over this long because these things tend to correct themselves. And you know, when we look at it here, we actually see, obviously we're going to have this big downside. So this is the skew. So that's factor one, right? Factor one is implied volatility was going up and realized volatility was going down. And I was like, what the hell is going on here? You know, is there a reason? Can we explain why this is happening? And I was aware that they were in these trials, but this is something that you would get like post news. When you're getting this pre-news, you have to stop and ask yourself, like, what's going on? Who knows something that I don't? Because there's no event driving this increase in volatility. When we look at the skew here, right, this shows us basically the demand on the put and call side of the option chain. And we can see that obviously there's a lot of demand on the put side because with these companies, people want a lot of downside protection. But we actually have this here, right? You see how it ticks up like that? This means that the out of the money calls had an increase in demand as well. So someone's betting on this going up big. And when I looked at the StockTwits board, usually when you see that, you think that it's the retail traders, right? Because they're usually long options and they're usually betting on things going up a lot of the time. And so, you know, it makes sense that when you see an uptick in call side skew, that it's the retail traders. But when I looked at it, it's actually not. There's not enough watchers. There's not a lot of people looking at this thing, right? Sure, they're all 100% bullish. So they are driving up the call volume quite a bit. But in the end of the day, is it enough to cause that much of an uptick for a company of this size? And I don't know if it was. So I chose to stay away from it, right? I was trying to look for selling opportunities for volatility. This wasn't one of them. But I actually legitimately believe this could be insider trading. Think about it. We have the news come out. The news basically says that, hey guys, we're in these trials. No, nothing after that. Yet, if we look over the last month, we've had this crazy increase in the price of options. But at the same time, the stock's been moving less and less. You don't see these things happen unless there's something behind the scenes happening. When we look to go explain it with the news, there's no explanation. And then we're still seeing this uptick in call skew. So this is literally the data you see when you see insider trading, right? It also could, and this is why one of the most important things when we're trading is to first find an inefficiency, but step two, and if you skip this, you can get screwed, is to understand why the inefficiency is there, right? So Siddharth, you're in here. I hope this really shows you like, this is the importance of doing the research and being able to come up with a logical explanation for why there's a mispricing in the market, right? It's not just enough to go off the data because then you end up in situations like this. One of us could have actually gone out and sold volatility here on Friday and we would have been bankrupt. We would have lost our entire account. It would have gapped past our stops. It would have this would have been ugly. It would have been so ugly. So I'm glad that didn't happen. And let this be like a really cool lesson. And what I'm actually going to do now is I'm going to break down for you a trade that you can make on this right now, right? So just because the news has come out and there was insider trading and all this stuff, or potentially insider trading, doesn't mean there's no trade right now, right? So Siddharth, if you're still in here, think about this. The news has come out. We know that they advanced to the next stage, but look at this. Implied volatility is still extremely high, right? We're basically saying that including that news now, we think it's going to move this much, but the market is still buying up these calls, buying up all these options, right? And it's reflected right here, right? 34% increase in message volume. Can't go higher. The sentiment can't go any higher. People are still 100% on the bullish side. So all we got to do is basically sell volatility here. Remember, the reason why the stock price jumped like crazy today is there was big news that there was no precursor for. The news is out now, though. So now that the news is out, we can actually go in and comfortably sell volatility now. Right? Yeah. So Siddharth is basically saying, yeah, he shorted vol a couple weeks ago, but got out because of the shadiness in the increase in IVol. Exactly, man. And like, it's so good that you caught that. That is such a good sign for you that you're on the right track with how you're mentally actually thinking about these trades. Because guys, this was like super sketchy stuff. Still a trade though, right? What you do now is you would go and sell the volatility. So now it's actually safer to sell volatility because we're aware of the news that was coming out, but the volatility is still high after the fact. So we can go in there and sell it. So this is where you'd want to be selling your iron condors. If you've got, a lot of courage, you can sell a naked straddle. I don't know about that though. That was something this sketchy. paid the extra bit for the wings. Everything else is looking good. We've got that relative action super high still, right? Skew is high. Everything's high. The spread is still there. There's still the uptick on the wings. Like it's still pricing in as if there's going to be a massive move, but where is it going to come from? What's going to drive this massive move? We already know about the passing of the trials. It's definitely not the insiders anymore. So now this is where the retail comes in after the fact and tries to hop on the bandwagon. And we can take advantage of that by selling them those options because they're being charged an inflated premium. Reason we can take advantage of this is most retail traders are just not price sensitive to the price of the option. So, this is where, being a versatile trader comes into play, right? We looked at MYOK. We see that the news has come out. The volatility is still high. There's no more surprises coming. We've already been surprised with all that insider BS that just happened. So we can go in there and sell volatility. It's straightforward. We have earnings this week. Thanks, Siddharth. I'll take a look at that quickly. Earnings. Let's see here. 14th. Okay, make sure to check the investor relations to see if it's confirmed, Siddharth. Forecast is greater than implied move in earnings this week. Yeah, exactly. Shorting vol up into the earnings might make sense here. Exactly. This thing doesn't move big on earnings. A lot of people are probably going to be buying this up because of the big move that they think will come on earnings because of this, but it's not really going to have that impact. Shorting vol into the earnings might not be a bad play either, Siddharth. Except the implied move is really low. If that implied move ramps up, it might be worth holding it into the earnings event because look at this. Historically, really bad to buy volatility during this earnings. It's definitely not a company you want to be holding, a straddle or options in earnings because you're paying like crazy amounts of money for that usually relative to how much it's going to move. So that's MYOK. Guys, I might do another 5-minute video after this where I actually go in depth, break it down, and I'll post that up for you guys to review it because I think this is a really good learning experience for anybody who trades volatility. You don't want to be caught holding the bag on something like this. And it just goes to highlight the importance of the research that goes into your trades beyond just what the data shows you. So I had a buddy who wanted me to take a look at WMT's earnings. So just to be clear, we're moving on from MYOK here. But just to be clear about what I look at for these earnings events, my help really comes in. I'm going to take a look at what the retail sentiment is. I'm going to take a look at the data beyond just the price chart. But it's up to you to go out and do some research based on the information I can show you to basically understand what you're looking for is how much of the news about the earnings event is already confirmed. Are they going to have a positive or a negative earnings? How bad is it or good is it going to be for them? The more certainty we have, the more you can put your faith into this data. The more uncertainty we have about what's actually going to be happening, the more we need to do our due diligence and be a little tighter with our risk controls. So earnings is coming up end of this week. Implied move is 4.9, average move is 4.2. So what this basically tells us is over the last 3 years of earnings, on the earnings day, the stock moves 4.2% up or down on the day. And for this event, the market's implying a 4.9% move. So not a massive difference, right? It's not like a crazy pricing inefficiency, but it's still there, right? So I know that you said that you had a long bias. You wanted to buy calls on this event to my buddy who was taking a look at this. And what I'm seeing here is that a lot of the time, it's pretty random if it moves up or down, and it's not necessarily a huge move. It's not been like super unprofitable to do it. You're basically break even buying options over the long run with this. If you have a bias, understand why you have that bias, like what would drive it to go up, and just be cautious that you're using tradable information, right? So don't be looking at it and going, oh, they have a 10% increase in revenue because they sold more product, right? That's not enough information because the market knows that too. You have to think about where do you disagree with the market? Does the market think it's going to be worse than you? Do you think it's going to be better than what the market thinks? Like, where is your disagreement? Because that is where your alpha is generated. That is where your edge over the market really comes from. And then this data is used to support you in that idea. So I'll give you a couple other little things here. Q2 is actually when they have small moves. So we, we can see here, right? Q2 is the smallest move. And then we can actually see here as well that if there is going to be a big move, right? This is the distribution of moves over the last 3 years. And what we can see is if there is going to be a massive move, we have a couple things that can happen, right? Just under 10% of the time, it'll be a big move to the downside. But if you're looking for something that is profitable to the upside, you have about a 16 plus 8. You have about a 25% chance of a 5% or above move to the upside. So pretty interesting stuff to look at here. I'd say it's about 50-50 if it goes up. But if it is going to go up, you have a good chance that it'll go up enough to actually be profitable. So really all you need to do is be right on direction on this one, and you should be safe. Yeah, guys, let me know if you have any questions about this stock. But if not, I'm going to spend 10 more minutes here and just break down a couple of other trades that I see. Actually, before I move on, let me take a look at StockTwits. Let's see what the general consensus is here. Okay, let's see. Sentiment. Sorry, guys, my computer, it's a MacBook Air. It's not meant to handle all the stuff I have running right now. So this is one thing that I don't like to see when I want to be betting on something going up is this level of retail sentiment, right? So 95.5% of these 59,000 watchers that have been kind enough to vote are betting on this thing going up. So, we know that most people lose money, and we know that a lot of the people who are losing money are a lot of the people who are extremely, it doesn't mean they're not trying hard. So they are engaged in the community. So this represents a good portion of the people that play stocks. And what we can see here is 95% bullishness. What are the odds that all these people are going to be right? Right? Like we know that most people lose money, right? We know that it's a zero-sum game. What are the odds that this guy's going to be right? It's probably lower than 50-50. So I would be cautious about buying a call around this event. Just because, as you can see, most people think it's going to go up. And this is the retail. This isn't the institutions. This isn't the insider traders. Those guys aren't voting bullish or bearish on StockTwits, right? They're too sophisticated to be engaging in that space. So we can comfortably call this the retail sentiment. And then when we look here, we actually see a massive uptick in calls and puts, which is a little concerning for me. Basically, the market's saying that there's going to be a big move to either direction. So I'd buy an at-the-money call if you wanted to go bet on the upside. But I don't think there's any real alpha here. I'd probably stay away from it, to be honest. Nothing for me here. So I'm going to take a look at a couple more stocks. I'm going to show you something cool here. So we can actually filter here. So I'm going to look for opportunities to buy options around stocks, right? So when I'm buying options, I'm usually either doing an unbalanced fly or I'm doing a long straddle. So I'm going to add a few filters, right? This is basically my scanner. So I look at 1,400 different equities within this tool. And, I add a bunch of filters to sort of narrow down the range of things that I want to look at. So let's say I want to look at companies with a price over $20. Right? So 20, let's say I want them to have an average option volume of at least 2,000. And then, usually let's say, so I want to look at the IV versus forecast, and I want it to be, the small ones. Let's see, SPG. Right. So now I'm looking for things where it's moving more than what the market thinks it's going to move. That's really what I'm looking for here. So this is one stock, SPG. What's SPG all about? Let's see. SPG, Simon Property. Cool. So yeah, let's look here. Right. Implied volatility is 59. Realized volatility is 72. So it's moving a lot more than what the market thinks it's going to move. What I usually do in these situations, if I don't have any directional bias, I will buy a straddle here, trying to capture this spread, right? So whenever we see a divergence in the realized and implied volatilities, we want to, or the forecasted and implied volatilities, we want to be trying to capture that spread. So we can put in a trade here where, we try to capture this difference. This difference right here is our expected value of our trade. It's what we're expected to make by buying a straddle here. So I think that's a pretty good play there. Do they have earnings coming up or anything? Oh, wow. They have earnings today. Good thing I checked. Let's go here. SPG. They have earnings after hours today. Interesting. This is really, really good that I saw this, because if I hadn't, I might have got caught buying those options there. I actually just going to flip what I said right now. I'm probably going to say you could be selling options here again. Reason I would say that is, look at this. For the earnings event, so basically between now and tomorrow morning, or between the end of market today and the open of market tomorrow, they are implying an 11.17% move in this stock, up or down 11.17, which is greater than this thing has ever moved in the past by almost 3 times. An absurdly big move for this company, something they've never seen before. And if you look, the market has always been overstating how much this thing moves. They've really never gotten it right, to the tune of 30% of your account in the last 3 years. So relative to the average move, this is really high. And what that means is that the premium that they're charging for this, for these options is really high. So what I would recommend to do here is just sell your iron condor. Do 2 at the monies and then move 2 standard deviations out either way and put your wings and try to capture that spread. There's a good chance that tomorrow this thing won't move a ton. It might move like 4 or 5%, but you have an 11% window to be right. 11% either way. This is a really, really good trade, I think. I'm sure if we go to the, my friendly stock twits over here, we can have a look at what's going on. You're going to see a lot of people betting on big moves, right? Not a ton of watchers, right? 4,285 watchers, which actually adds a little bit of concern for me, right? Especially for a company of this size, 17.73 billion market cap. Just because, when you don't have a ton of watchers and you're still seeing this demand, it gives me concern that like someone knows something I don't. So before I actually go ahead and place this trade, I'd probably do a lot more research, just to be certain that I have a good idea of who's on the other side of my trade, how much information is known, basically why is this number so high right now? I think we need to do some research to actually really figure that out, because it's absurdly high relative to what this thing should be expected to move. So let's take a look at one more. I'm going to look at VLO. Another really big mover is, when's this earnings? Is it done? Yeah, it's not till July. Okay. Still implying a really big move for the next earnings event. So that's kind of interesting, which means that between now and then you can expect the volatility to stay pretty high. But what we're seeing here is 52% implied, 59 realized. So if you have a directional bias on this, this is one that you could totally play. I'm not seeing anything super concerning. I'm just seeing a market inefficiency. Has it been that way for a while? Yes, it looks like it has. So we've had this spread for some time. So it's been outperforming what the market thinks for what looks like at least about a month now. So these are good trades, right? These are good trades to buy some volatility. If you have a directional bias, if you're biased to the upside, you can just buy some out of the money calls pretty cheap. But if you're biased to the downside, you can structure a directional fly to structure a cheap bet there. As long as you have an idea of how much you think it's going to move, you can take advantage of this skew right here to make a cheap bet. So guys, if you don't have any questions, I'm probably going to wrap it up there. I'm going to go make a video on MYOK for you guys, really summing up what happened. I think it's a really good learning lesson for pretty much every volatility trader and every options trader in general. Because, I literally called it on Friday that this was going to be something sketchy, right? Me and Siddharth were talking about it. Siddharth saw it too. So really glad that he caught on that as well. And if you guys have any questions for me, shoot me a DM on Instagram. You can reach me at Predicting Alpha on Instagram as well, or on StockTwits at Predicting Alpha. And we do this every single morning. So guys, make sure to subscribe, right? Drop a like, subscribe, leave a comment on the video. We're trying to grow this community. I want to be doing this live for you every morning. This is the type of information that if I had early on in my trading career, it would have really got me thinking differently about trading. and I got my mind on the right track for what it really takes to win in this game. So if you guys like this video, leave a comment, subscribe, and I'll talk to you tomorrow. Take it easy, guys.